Have you ever wondered what the stock market is? Perhaps you've heard friends talking about it, or maybe you've seen it mentioned in the news. Today, we're going to unravel the mystery of the stock market and break it down into bite-sized, easy-to-understand segments. Imagine a bustling marketplace, but instead of fruits and vegetables, this marketplace trades in shares of companies. That, in essence, is what the stock market is. A place where buyers and sellers come together to trade shares in public companies. Now, let's dive a little deeper. When a company wants to raise money, it can do so by selling a portion of itself in the form of shares. This process is known as an initial public offering, or IPO. Once these shares are listed on the stock market, anyone can buy or sell them. The price of each share is determined by the laws of supply and demand. If a company is doing well and investors believe its future is bright, demand for its shares will increase, driving up the price. Conversely, if a company is performing poorly, demand for its shares will decrease, causing the price to fall. But where does all this trading happen? In most countries, it takes place on a stock exchange. In India, for instance, the two main stock exchanges are the Bombay Stock Exchange and the National Stock Exchange. You might also have heard about stock indices. These are essentially scorecards for the stock market. They track the performance of a group of stocks and give a broad indication of how the market is doing. For example, the S&P 500 tracks 500 of the largest companies listed on US stock exchanges. Now let's talk about the players in this market. There are three main types: institutional traders, professional traders, and retail investors. Institutional traders are large organizations like mutual funds and pension funds. Professional traders make a living from trading stocks, while retail investors are individuals like you and me who trade stocks as a hobby or to supplement their income. But a word of caution here. Trading in the stock market is not without its risks. In fact, a significant percentage of retail investors lose money in the market. This is often due to a lack of knowledge and experience and the unpredictable nature of the market. Therefore, it's important to educate yourself and understand the risks before you start trading. In conclusion, the stock market is a marketplace for trading shares in public companies. The price of each share is determined by supply and demand. Trading takes place on a stock exchange, and the performance of the market is tracked by stock indices. There are three main types of traders in the market: institutional, professional, and retail. But remember, while the stock market offers the potential for high returns, it also comes with a significant level of risk. Now, we hope you have a better understanding of what the stock market is. This knowledge is the first step towards becoming a savvy investor. So, keep learning, stay curious, and who knows, you might just find yourself trading alongside the pros one day.